Good afternoon, good evening, everyone. Today is Tuesday, September 17th, 2024. Our goal is to review the market generated information in a holistic fashion. We're intimately following the auctions narrative of both ES and NQ. If we have time, we'll theorize and add additional commentary towards the end. We have not speculated in the market this week, as this week is rollover and the highly anticipated FOMC rate decision, which comes out tomorrow at 2 p.m. Eastern, 11 a.m. Pacific. With that being said, let's go ahead and look at the MGI from today. As I mentioned, this is rollover week, so all of our chart drawings have been updated. We kind of cleaned up a lot. So some information that may have been redundant or a little confusing has been removed. So we're really clear between these 5700s and these 5400s. Really below the 5400 are mainly singles and a few gaps here and there. But we'll look at the market profile a little later on. So we are looking at the December contract opposed to the September. There was about a 61 point difference between the S&P 500 for the futures from September to December, and about 237 from the NASDAQ September contract to the December contract. So all of our drawings from the daily have been updated, and the market profile from what you are seeing here. Not only that, but we have a few feeder charts for my initial balances, the overnight levels, so on and so forth. We just want to make sure that everything is taken care of. So that way everything is accurate. So just going with our typical process, where's the market coming from and what's the narrative and what was price trying to accomplish? So we are looking at Tuesday. Yesterday was a full day, no holiday or anything, but the main catalyst that we have for today was the retail sales. Really not too much regarding earnings. Mainly for this week, we had the very light data from yesterday, Empire State Manufacturing Survey, but primarily the last data to the rate cuts was the retail sales and this bit here, the 530s and the 7 a.m. releases. So we'll look at the price action to see was there any kind of SOC that was formed. So we can get a better understanding of how the market responded to that. But really, we're really just waiting, kind of spinning our wheels until we get into the FOMC. But I think it's important to mention where we were regarding the contract for December and just our progress from where we picked up. So again, to understand where we're coming from, we just need a little bit of context. So I'm going way back looking at the beginning of August with that steep down from the carry trade from yen. We had our impulses and consolidation just really drifting up, headed back into that range where we came from July. As we had that 2 week balance range, again, this is something that we've been talking about for the longest. We had our two week balance range, and then we had our big close under that balance area with high volume. As we closed within the high volume, we were bear flagging and ended up closing within the middle of that August range. As we finished that week on Friday, we had a small drift up with the overnight session and a strong close. And any test around this impulse candle here was completely rejected. Not much volume was traded near the lows, and we found our way back up into balance. We'll look at this on the market profile. I'm not going to turn this into a weekly or a monthly review. We just haven't done we didn't do the review yesterday, and just some general context of where we are with this change. So really not much has changed for the contract switch from September to December. We're just doing more of our continuation to the upside with our balance, and we did look above this balance zone here, which is at the 5720s. Again, we need to say these prices a little bit more so we can get familiar with where we are. The September contracts are in the past. In the past, that used to be a bit confusing for me, but we're now looking forward. So again, this is the December contract. The high of today was 57.37 and the low being 56.78. So again, we're at the top part of this range, and the fact that we opened here to start the day, really the goal for the buyers who have been in control on the highest time frame, and immediate was the bears until they gave up really this consolidation range from 2 weeks prior to start the month of September. So as we drifted back into balance, right into the 2 week balance range, we are right back where we started for the middle of August and right back into the beginning of July, which is just really near these all-time highs. So really not too much has changed, but given the context of where we came from, there's been a lot of volatile action to a degree, but we're really just moving sideways. But you can't move exactly sideways. You have to move up and down, and we're just moving down and up. I mean, it's pretty simple. So where we're coming from, more balance. The goal was to keep price where it's at as we head into the FOMC decision. That way, if there's any room to the upside, easy all-time highs. If there's any room to the downside, the buyers have really from the 57.40s down to the 54.50s. So they have really about 300 points of range to give up before they really start taking some heat. But we'll leave the speculation for another time. Same situation here for the NQ. They too are in the same situation from the middle of August, but they have been noticeably weaker. We all know this. While the bulls are the strong hand from the highest time frame, when you're looking at the intermediate standpoint, the bears have somewhat control. So this one is a little bit interesting here. So we'll need a bit more information. So you can see that they're nowhere near this pivot high. In fact, we're about, was this 400 points? This is 20,260. And we are currently about, 500 points away. So say what you will about this. FOMC is really going to change a lot of this. We could spring up and down and just end up unchanged. Who knows? But really the same situation here for the NQ. The NQ really just want to really hold this zone here so they can just hover around this mid-August point. So that way, whatever decision we have from the Fed, we can kind of take it from there. So we won't look too much into this. I know that was a lot. We'll look at the footprint on a daily. And we can see that drift up. And then we can see some sellers stepped in here near these 20s for the 57.20s, essentially. Looking at the volume, again, you want to take the volume with a grain of salt as well as the data. Really, all of this because we're still in rollover. But from what we can see, it's about a little over 1 million. The highest point, yes, sellers were in control for a fair amount, but it looks like buyers kind of stepped it in. We'll probably need to look at the intraday footprint for a little more context there. Not really too much to report. Again, you want to take it with a grain of salt as we are in a rollover. Same situation here, same information. Sellers had a little bit of control, but buyers had a little bit of the advantage with the max being about over 1,400 and the minimum being about 850. So it looks like we had a double distribution day here. Got a big hump and another hump here. So we'll need to look at the intraday or just the market profile for a little more context. As we look at the sector tracker for the S&P 500, we ended up unchanged. Again, this is really just a lot of commotion going on and undecided sentiment as we head into the FOMC. Looks like we have energy leading, which is one of the lightest sectors for the S&P 500. And yeah, this is just kind of just strange to look at. But yeah, it looks like consumer discretionary and financials, industrials ended up being the leaders for the more the heavier side. And really basically unchanged for technologies, utilities, communications. The worst today was healthcare, which is just interesting to see. Same with the staples as we head into the FOMC. So we don't want to look too much into this as we are in rollover. It's a lot of changing, moving around with option expirations as well. So we have an understanding where we are from an overview perspective. Let's look at the NQ. And we for sure have about, I think it's 150 days. So this is about 150 days. So about a little less than half a year that we have. Again, I have updated my drawings. So if you've been following along, things may look a little different here. So we updated some of our drawings. But essentially we have our composite, which goes back to, and make sure that I'm aligned to you. So this goes back to, yes, about mid-April. So we make sure we had all of our right information. So that's all good. And we can see our VPOC is here near the 19,200s. We have our composite here that goes back to mid-April. And then we have our monthly composite here for September. So we can just see how we've traded. And again, that information you'll see on the prior contract, not the current contract that we are. So a bit of a B-shaped profile, but just multi-distributed, just a lot of volume going around just across the board. So again, you have your composite and then you have your monthly, and then we simply have Monday and then Tuesday. So if we look a little deeper, we have our double distribution day, got a hump here and a hump below. Clear double distribution, really not too much to say there. We couldn't get above the 900s, 19,900s. We're still stuck there. This may be something that is broken above for FOMC, but again, we'll leave the speculation. But we're really just trading sideways as we just build volume. So again, we'll merge this day together, and then we'll actually merge this with the whole month, and you can get an idea of what we're looking at. Again, we have our VPOC zone here. And if we do head lower, where the composite volume point of control is, which is about 600-700 points below, it's a lot of volume to eat through. So the passive lethal resistance is going to be above us, but the majority of the contract has been traded a little lower, which is not unexpected as the NQ has been a bit weaker. So not too much was done today. No singles, nothing like that. Same situation for our composite here. The VPOC is near these highs. Big double distribution here. These are about the same amount of volumes near the 5,600 and the 5,700. We're not really too surprised here at these hold numbers, which is kind of cool to see. And then the VPOC for the month is a little bit below, above the, it's about the 55 halves, the 55 40s. So again, not too much here to speak of for this specific day. Double distribution. They had some trouble staying above the 2-week balance zone, which you would imagine that they would have a little more excursion. That ideally they would like to hold those 57.20s, 57.30s, but once they poked above, they couldn't stay. They couldn't stay above. Well, again, we'll look at this on the intraday basis, see if we can glean anything from there. But a poor showing from the buyers to push a little higher, but they did a solid job staying within this high volume node here, which is around this 5,700 zone. So a solid job. They test below, they test above, but we settled in the middle, unsurprisingly. So again, we'll put those together with the monthly profile. And that's really it. So just a lot of balance here, a lot stronger than the NQ, which they should be because they're a little more balanced overall. All right, we'll look at the footprint, look at the 65 minutes, see if we can glean anything from the NQ. All right, one moment. I need to fix something. All right, I had to fix the ticks per level. Put this on 1 point per level instead of quarter. Okay, cool. All right, so looking at the NQ. So again, we had a small little gap up, and we just found sellers essentially for the whole time. You can see the max was about 1,200 and 1,300 here for this first and then that third bar. So sellers were just really trying to swarm the whole time. So again, we don't know if these are buyers that are de-risking and taking profit, or if these are new money sellers that are engaging near these quote unquote highs for the NQ. Not really too much to speak of. Build volume sideways for the ES. Exploded lower, and then we just bear flagged the majority of the day. That's that same behavior that we saw here for the NQ. Build volume sideways, impulse, and then bear flag to the end of the session. So again, if you look at this just in the vacuum, you would say, hey, this may be pretty bearish, but given the context of where we are, actually, let me just stay on go to the 138 minute candles. So though this building volumes to the side and then impulse lower may seem a bit bearish, just given the context of where we're coming from, You want to take that with a grain of salt. But do remember that we are in balance, and this could have simply just been a retest above and a stop run, and we may find our way a bit lower. But who knows? Again, that's a bit speculative. So we don't want to just look at this in a vacuum and say this is completely bearish, but we do want to expect that we're seeing a possible rejection above this 2 week balance range as we head into the FOMC. Same situation here for the NQ, except NQ could not get near their high. So you can just see how much weaker they were. If anything, they couldn't even get into the 2 week balance range that we were seeing prior to. So yeah. So another lower high for them, but a higher high for the S&P 500. As we look into the actual 3-minute candles, we'll go back to the NQ. Let's have our RTH VWAP. So again, we had our Sunday and then our Monday session, which we just totally skipped over. But essentially, we just chopped sideways, went lower. We had a low to high day, and then we ended up drifting up in the overnight. So really, not too much to talk about there. They found support at their prior day's range, which was on Thursday. Trade a little bit below Friday. So again, we're not gonna spend too much time with that because as we went lower, we just immediately reverted back. So really, not too much. Just more to balance action, like we were saying. Really, just trading sideways to a degree. But anyways, this was yesterday. This was a low to high day, or high to low, and then a low to high day, closing near their open. And then as they chopped sideways during the overnight, chopping above the prior day's IB mid. Once they got above the IB high, they continued to trade, and they were able to open up. Where exactly did we open? At the 19,800s. So yeah, we were near Friday's high of day as we opened. So as we open from that almost Friday's high of day, we open up and immediately start trading lower, and we can't hold the open. As we're unable to hold open, we find support within our overnight range before the prior IB high, and ended up trading and chopping around this open. Again, this seems pretty unfortunate to trade in. More power to you. Once they got above and broke that weekly high and stayed above it, which was also the RTH HOD, there was no follow through, compression sideways, no upside to that trade at all. And then we get kicked out of their range back up under this 5 smoothing average, which eventually tests through the VWAPs and the IB mid. We found a little bit of support there. Could not trade it back above the overnight high. And then we found another leg lower, making a new low within this little bit of range. Could not stay above the VWAPs, the IB mid. Found our way back under this 5 smoothing average. And then we just eventually had our leg down. I think buyers just kind of gave up there. Had our liquidation break. No real fight to get back above the IB highs at all. And this is on the NQ, who's noticeably weaker. And again, we chopped sideways, as we mentioned earlier. We had our breakdown, and then we just bear flag for the remainder of the day. Same situation here for the ES. If I can get this. Same situation, except they are much stronger. Notice their overnight is past their prior week's high. They're just chugging along, chugging along, chugging along. And again, I did not look at this in real time, but it just seems like they ended up being weighed down by the technology sector. So they ended up building volume a lot more sturdier to the side with a small look below that range and then immediately straight through it. And notice they were able to stay above their highs for a while. And then once they had two closes under their five smoothing average. They could not stay above it. A look above that five smoothing average, look above this IB high, and then we ended up just grinding lower. So I mean, this grinded lower for almost, yeah, so almost an hour. So just nothing at all. I'm assuming this may have been the divergence from the other sectors and probably technology, I would assume. So again, we just find our way down. There's no real action to get above. Even the little fights that we had here could not get above the five smoothing average and nowhere near this IB low. And then we just bear flag for the remainder of the day. Not really too much to say once we got below the 57.12s. So if we have to look at this without the context of FOMC, just looking at it from a pure price standpoint, um, I wouldn't say that this would be the ideal short to play for a breakout, but I can see how you would think that. But to be honest, the fact that we're still trading well into this overnight range, I really wouldn't look too much short there. I believe the better short would have been on the Nasdaq, but you would be looking to buy in this kind of situation. But where would you buy? You can see people try to buy here at the prior IB high. I'm assuming this may be like day traders or something like that, but definitely the price was just forcing its way down. Whether that's OTF, somebody on the higher time frame really pushing it down, but there was some selling that needed to be done and selling that was completed. Really simple as that. I really don't see anything in here too much that will lend itself to um, a higher probability trade. Not really seeing too much here from the SOCs for this 530, but there's retail sales. I mean, even if you look at it from this standpoint, we're doing the typical zone that we did. We opened up within that zone. We kind of looked below it. We kind of pushed above. There was no real continuation. We found our way, kind of checking in here often. If this is really going to be, if this zone is going to be support, we really need to break above and then use it as support and then really just kind of find our way away from here. There's no reason we should keep testing within these ranges. That's a lack of confidence. That's a lack of conviction. So again, the more tests that we had through here, this one, this two, this three, this four, and then just staying in this range, maybe now that I'm talking about it, maybe having a stop below here at this 57.17s for myself, possibly risking 4 points and going back to this open, or even above here for maybe like 5 or 6 points, possibly targeting, maybe like lower in this range. But again, just the fact that you're way above, I really don't see why you would be looking for shorts. And I don't see any kind of like buy setups here at all. But I can see why people thought buying with this prior week's high and then the prior day's high from Monday. You can definitely see that there were people trying to buy it in here, which I would assume these would be day traders. And even once we got above, we could not stay above that level, which is a fairly decent sign for sellers for able to keep them below former support. So if this would have worked out in this area, this prior weekly high, prior IB high, this will look good in hindsight. Maybe getting back into this range and kind of doing something like this, which would be similar to what we saw yesterday, maybe. But again, maybe hindsight is kind of throwing me for a little loop there. But just given the context of what we have, which is always important to any trade that we do, I really don't think this would be on the docket for any kind of trade, and nor would these shorts be either, which is the reason that we sat on the sidelines today. So move of the day. I mean, if you just had to just kind of twist my arm and force me to do it, I think this was like a clear sign here. This look above and fell, especially with the general weakness that they have. That was a clear sign for you to look look short, and then potentially this look above there. You had a few other attempts in here for you to either add or initiate short, targeting this IB low, with hopeful for continuation. But again, that's using hindsight bias. Who knows what this looked like in real time? So yeah, so how well of a job did the buyers do? I think given the context, they did a decent job. They were able to take some stops above. and possibly get some new money shorts involved at these 5720s and at these, I think it's 19,900, right? Yeah, the 19,800s for the NQ, the 7 800s. But the fact that it was like a look above and it fell, and they still closed green, they're still within the zone. I think it was decent overall. So not really a good showing on either one side, but I don't think either side was really trying at this point. I think the only people that were really buying was like weak money hands from what we can see. No real big conviction from the sell side from what we can tell. Just possibly a profit taking day and just some de-risking as we head into a serious risk event. So as far as like looking forward, I don't think it really matters on if we drift up or drift down, given the context of what we have and where we are. I think anything can happen, barring any kind of like black swan, and we're not opening up, 2-3% lower. I think really anything is fair game as we head into FOMC. A lot is going to change, and we could be looking at all-time highs, or we could be looking, down here near these 54, 55s, hundreds again, down, 200 points or so. Who knows? I did make a lot of notes for my FOMC, for my personal notes as I prepare. Just a reminder that, anything can happen, and it may take some time as well for everything to kind of play out. So it could be 5 minutes, 15 minutes, could be an hour, it could be a day or even a week. So I'm not going to be surprised because we've definitely seen this before. Let's not be surprised if we have some kind of a retest on Thursday. And yeah, this is just a really interesting time. So just really make sure you get your rest. I'll do my best to record the FOMC tomorrow. I'm not going to record the RTH the beginning, but I will do a small amount of prep as we head into FOMC, given the new information that we'll have, and then hopefully record the actual data drop. It's definitely going to be crazy. I'm going to get my software ready, so we'll do our best. But yeah, just make sure you get some sleep and take care of yourself because tomorrow's going to be wild. And yeah, just make sure you take care of yourself. All right, later.